All right, well, my camera is not working right now, so I apologize. But anyhow, let's talk a little bit about why banks say no to small business loans, even profitable ones. And this is something that I wasn't aware of myself when I first started as a funding agent. If you've ever wondered why a profitable small business owner can still be denied by a bank, you're already thinking like a funding agent, even if you don't know it yet. Today, I want to walk you through something most people are never taught, not in school, not in business, and definitely not by the banks. So, I would highly suggest pay attention, take notes, and all that good stuff. So, typically, here we have the small business owner. This is the belief most small business owners carry. They assume loan denials mean failure, poor management, or doing something wrong. But that's just a false assumption. And this is why most small business owners will say, if my business is profitable, the bank should say yes. But as I've mentioned already in other recordings, 90% of small business owners get turned down for loans because banks I don't know if you noticed, but banks look at small business owners as, you've heard the big companies where they call them too big to fail, like when we had the great financial crisis back in like 2008 when the stock market crashed and all that, or real estate market. Well, if you remember, a lot of those banks back then got bailed out because they were so tied into the system that if they didn't get bailed out, they would have collapsed. Lehman Brothers went down, but a lot of these other big mortgage companies, they survived it, and that's why, even though Obama was saying he was going to go after them and all this stuff and everything, but they were too big to fail. Well, banks look at small business owners as too small to care. Okay, they're okay with the failing, and banks do not lend based on profitability. They lend based on risk transfer. That single misunderstanding explains most loan denials. A lot of small business owners, like I said, they think, whoa, I'm profitable, so why wouldn't they loan to me? Well, banks don't want to be dealing with the third counterparty risk, they call it. And small business owners are that third counterparty risk when you take into account use small business owner, the customer, in the bank. And that's all they care about is limiting their risk, not managing it. And that's a big difference. This is the question banks care about more than anything else. Not, is this business growing? Is the owner smart? Is the opportunity real? Just this. If it goes bad, who pays? Right? That's what they want to know. They're into eliminating risk, not managing risk. And that's a big difference. If this fails, who eats the loss? And they don't want to be the ones to eat the loss. Every traditional bank decision comes down to these three filters. So let's break them down simply. Banks look for three things: collateral, personal guarantees, and predictability. Those are their three filters. So their first filter of collateral, assets they can seize. Banks want assets they can take if things go wrong. Property, equipment, cash reserves. There's no collateral. Where's the collateral at? That's how they see it. Your business instantly becomes a high risk for them or any small business owner that they're dealing with. Then we have filter two, personal guarantees. Your credit, your assets, your liability, not theirs. If your business fails or a small business owner's business fails, the bank still wants to win. That's why they can lean on your personal credit and personal assets. Many owners don't realize this until it's too late. So they basically have to sign their life away, their house, any assets that they have. And the banks put them in that position, and where a lot of small business owners do that, and it turns out bad for them. And the third filter is predictability. Is it stable? Is it a boring business? They don't want any surprises. Banks love boring businesses. Long history, stable revenue, same customers, same model. Creativity and upside are not advantages here. Their risk can, as far as small business owners, excuse me, as far as the banks feel about it. They want it simple as possible. Banks avoid businesses that are fast growing, seasonal, owner operated, opportunity driven, and even I would even say that they're heavy when it comes to needing more and more inventory. So, ironically, many great small businesses fall into these categories. And that's why profitable owners are often shocked when they're told no. And it can take 3 months, however long, and it can be tough for small business owners. But here's where we have the gap. Capital demand doesn't disappear when banks say no. Just because the banks say no, that doesn't mean it eliminates the small business owner's need for capital. And that's where we come in. So here's a key insight most people miss. Small businesses don't stop needing capital just because banks say no. As I said, they still need money to operate, grow, and survive. So what happens next? This is where things break down. Not because business owners are irresponsible, but because no one explains the alternatives. And that's what we're here for. When banks say no, businesses often end up stalling. The business goes nowhere. They overuse credit cards. And Lord knows, I've been there myself as a small business owner because I used to sell on Amazon as an e-commerce merchant. And I went through a lot of this stuff. Um, you end up taking bad advice sometimes and never hear about better options. And most small business owners don't know there are alternative options out there, such as our funding, where they can keep their business up and running in a safe and responsible way and don't have to worry about if the bank says no to them. And that's a very powerful position to be in as a funding agent when you get the right small business owner. This is the opportunity. Funding agents exist because someone has to bridge this gap. Someone has to explain why the bank said no and what other paths actually make sense. So, does that make sense to you? This gap is where funding agents exist. A funding agent doesn't push money, they educate business owners, align them with the right options, and help them move forward intelligently. No cold selling, no pressure, no chasing unqualified leads. That's not what we're about. That's not what we teach. Funding agents don't sell loans, they provide education, alignment, and execution. And just to give you an example, one of the small types of business owners that we suggest that people go after are small business owners that produce assets, cash flowing assets. And if you don't know the difference between a cash flowing asset versus, say, a liability, a cash flowing asset is something that's going to pay the small business owner whether they're open for business or not. And liability is not going to pay whether they're open or not. And even one of the strategies that I use sometimes, I will ask a small business owner, do they have payment processing? Because there's a technique, a way, or strategy that we can show them how they can turn their payment processing into a cash flowing asset so they're producing more income. So when they come to borrowing the money or getting funding, now they have definitely have the debt service in place. The money, the profit in place to be able to pay that debt service of the money that they're borrowing. And the best businesses are businesses that produce cash flowing assets. And the best example I can give you is real estate investors. A real estate investor may want to borrow money or whatever, and they're in the best position to do that because they have cash flowing assets, which is their units that people live in, where they're going to almost be guaranteed getting that cash every month. So that lowers that risk. So we want to look for small business owners who have assets that are producing income, whether they're open for business or not, if that makes sense to you. This role is growing fast because the system is tightening. And when you have the opportunity as a small business owner to get funding in times that are tight and you need it and you can afford to pay for it, it's like a gift sent from heaven for them because the banks are saying no to them. So the best time, believe it or not, to get involved with funding as an agent is when times get tight. And clarity is becoming more valuable than persuasion. So if you make that clear to a small business owner, it's better than trying to persuade them to take on debt. We don't want to persuade them to take on debt. We want to educate them and align them right to the right lender because we have lenders, top 20 lenders we have, and not every lender is right for a particular small business owner. It depends on the situation. So this is what we do to educate them. And all you have to do as a referral agent is simply refer them to our internal team and they take on do all the heavy lifting from there. Your job is just to babysit. So why demand is exploding? Banks tightening, the economy or whatever. Small businesses are under pressure because of it. And they have zero financial education. A lot of people think just because someone is a successful business owner that they understand how money works. And that's just simply not true. And this is part of the reason why a lot of small business owners can't scale because they don't understand the systems and the knowledge that is needed to be involved in order to get them to scale to the next level. Because anybody can start a business. Think about it. Who can't start a business? So the rare skill today isn't sales. It's understanding how capital actually moves and being able to explain it calmly and clearly. People with curiosity, integrity, and system thinking do extremely well here. And when I talk about curiosity and integrity and systems, it's really about getting curious of what that small business owner is about and finding out how our funding services can help in maintaining your integrity so you're making sure that you're dealing with a small business owner that can benefit from our funding. And we have systems in place to help you to make that happen. This is a real skill. The real skill or rare skill is understanding capital flow. And that's simple to learn that. And the more you learn about funding, the more you're going to be able to help your small business owners that you're trying to service in your local area. Because that's really what we're about. We're about empowering local small business owners. This isn't a hustle, and it's definitely not for people chasing shortcuts. This is not for hype chasers, get rich quick seekers, and pressuring salespeople. If that's you, this is not going to be the right place for you. Who is this for? If you're the person people already come to for clarity, this may feel strangely familiar. And there's a lot of, maybe you're somebody who's in your local city and town that you have some influence. I'm not saying that you do, but let's just say you did or you grow to have influence in your local community. People know you as the funding agent to go to when the banks say no to them. You can even develop relationships with the banks in the area and let them know, hey, we offer alternative funding. So for any of your small business owner clients that come to you for a loan and they can't get it, please send them my way. And a lot of the banks can't accept any referral fees or anything like, because that's just part of their rules as bankers. So this is a perfect opportunity. You can get involved with your chamber of commerce, and just network. That's what this business is all about. It's about network and people knowing what you do and getting your name out there. It's almost like a real estate agency. That's kind of what you're doing here, except you're doing it for funding. So this is for people who like learning systems, want leverage over the grind, and enjoy helping things make sense for your small business owners in your area. So, if this made you think, why was I never taught this? Or I already explained this to people. Um, there's a lot of there's a short evaluation link, below that you can take is bizfundingagent.com. We do evaluations with everybody to make sure that they're a good fit. Because once again, this is just some get rich quick scheme, which you see a lot of these people selling, becoming a funding agent and all that. That's not what we're about, because we know that this takes a commitment and it takes time to build. But it explains how the funding agent role works, what it pays realistically, and whether it's even a good fit. And there's no sales call required. So if you're curious, you want to learn more, no pressure, consider doing that. Whether or not you pursue this, understanding why banks say no already puts you ahead, because once you understand the rules of capital, you're no longer confused by the system and you can actually work within it if you ever choose to. And you can do it full time or part time. All right, so that's the end of this video. Thank you once again for taking the time, and I'll be talking to you soon.